Esther. We've seen some supply of non-oil exports at the INA window. So we've seen a gradual climb down of rates at the INA window from 364 level to 36280, 36250. It's a new year, and we're beginning to see some fresh interest in emerging markets, including Nigeria. Although it would have been more if there were no elections, but I can confirm to you that there's some foreign FDI funds coming in that are then being disposed at the INA market, proceeds of which are then targeting certain maturities at the secondary market for fixed income for now.
So what rates did we see today at the INA window? I'm just taking a look at the Naira rates at the parallel market, 362 to the dollar right now, but what rates did we see today?
At the INA window, it was predominantly at 363, with some demand at 362.80, 362.50, but we've seen a gradual climb down from 364, which was where it was for the largest part of December.
Did you expect it to go lower this week? What's the average forecast for this week?
Honestly, we're looking at 363 because should any house supply at 362.80, it's been quick off the shelf. The challenge is that the flow that I explained or described earlier could be a one-off. It may not be sustained, but the central bank on its part is continuing intervention and stabilization. We've seen that they've been able to hold on to the value, maintain the value all through the Yuletide period. The target is to keep this level of sanity going into the entire first quarter, even after election.
Okay, I'd like you to share your thoughts on the latest inflation data out, 11.4%. We're seeing this gradual climb now. What are your thoughts in terms of, how this impacts on rates, and just how also on the other hand, for the first MPC meeting for this year, the kind of comment or if we could see a major decision coming out from the MPC?
Yeah, inflation moved from 11.28 to 11.44. It's been anticipated, like you said. The major driver or influence here is food. Food remains a challenge because of infrastructure and, of course, the kind of decay we suffer in the volumes, that causes the difference or the gap between volume produced and volume actually sold in the markets. The other issue is insecurity and then flooding, which could even aggravate the challenge of food pricing going into this year, that's 2019. Interest rates are expected to continue to be high simply because of the illiquidity and the stance of the MPC all through last year. This is not expected. We do not expect any change. Of course, looking at the elections and the targeting they've done, there are attempts to keep the Naira stable against the USD. To a large extent, they've been successful, and we do not expect any immediate change on that. We expect that they will continue to pay as high as 15 on one-year securities to ensure these securities are of high interest to local and foreign investors. So rates are high as they were because we've seen 1 to 3 members of the MPC call for a reduction on interest rate. That's on the MPR, which is at 14. But we do not expect this to happen yet, maybe in the March MPC, but for this January we expect the MPC to hold and maintain its stance on tightening.
Okay, let's quickly briefly talk about the money market and how it's fared so far this year. Liquidity inflow, especially from FAC. What can you tell us?
For FAC, we expect it in the next 1 or 2 weeks. System is illiquid and quite tight. Rates are up to 20% on the money market. That's on the interbank. And most banks are actually being funded on the overnight from the central bank through the lending window. Of course, this is not usually a popular option when there are retail FX sales. This week, of course, we expect retail FX refunds and withdrawals. So it's expected to go into, we expect to go into the weekend even with more tightness actually than next week. And the next 10 days we expect further allocations, which will then come and then give some reprieve, which is usually just for a week or so. OMO and continuous debits of CRR will take out these funds to simply enhance the stability in the exchange rate that the central bank continues to target.
Now, for the open market operations, we saw one yesterday, 100 billion. I think the CBN was able to sell about 23 billion. But what can we expect in terms of, will there be more for the rest of the week? And how do you see that impacting on system liquidity?
Yeah, we expect another OMO auction on Thursday when we'll see up to 780 billion mature for NTB. That's the Nigerian Treasury bills and OMO maturities, about 700 billion coming in. We expect an immediate mop-up, and then we expect that retail FX, the demand takes out some more naira. So, I mean, going into next week, it's expected to be tight, and overnight rates remaining as high as 20%.
So for the Treasury bills, when we do see those auctions and effective rates, which is still, I mean, for some of the maturities, for some of the bills, as high as 17%, is that going to remain, is that what we can expect for this week, or do you anticipate a change?
We expect a marginal inch up on the 1 year being issued at the primary auction to ensure that they are attractive. Because what we've seen is that because of the level of supply, there's some level of apathy from major fund holders who seek higher interests, or simply as a result of illiquidity. 100 billion was issued or offered as at yesterday, 23 was sold simply because of system tightness, really. So should rates go up, let's say to 15.5 and discount, and the effective rate inches up from 17.6 into 18% level, we expect that funds will be made available to pick up these attractive offers.
Bankole